Let's talk about commodities now and also let's get on board Deepen Shah, who's business head broking at Staven.com. Deepen, I welcome to the show. How are you looking at the gold and silver prices? Because while we are posting a weekly gain, would you say that the Fed not tapering perhaps is now factored into prices, and would you be looking at some declines from here on?
Absolutely. After the announcement, we saw some spike in almost all the commodities, but now it seems that the prices have factored, the event is factored in the prices, and now we could actually assume and say that there could be fall in prices in the national markets as well as in international markets, and we could see the international markets reaching some 1320 levels and the national markets another 500 to 600 points downwards in gold prices specifically.
Vijay, what's your sense coming in for silver? You've been talking about those sub 50, sub 48 kind of levels as well.
I would still wait in anticipation of those levels before going out and deploying any more money in physical investments, because this kind of choppiness can only lead to nervousness in the sentiment. Waters are getting muddied, and I think the people who are waiting in the wings to write out checks to buy silver will basically desist from doing so. I would still wait for 48,000 or sub 48,000 levels before going out and deploying another 10% on the delivery side. Till then, I think I would stay away on the sidelines. No futures buying, of course.
Yeah, that. But there has been a second week of decline coming in for the energy space, especially the crude prices, Deepen. And would you get into the next week with short positions yet again?
Specifically, we had seen a huge fall in crude prices yesterday on MCX, especially with around 200 points fall coming into the markets. Now it seems that the prices are a little bit overstretched in terms of selling, and we could expect to see some kind of bounce back. So, exclusively for the traders, we could initiate some kind of buying positions at lower levels of around 6,660. On the higher side, we could see as targets. So some lower level end buying could be initiated, but exclusively for the traders. And if you're talking about positional trade, on every rise at around 6,700, 6,800 could be initiated for short selling.
A bounce back definitely is in case of natural gas prices, 1% up, Vijay.
Right, Manisha. I talked about how 236 to 238 levels would be the level to watch out for. And I think 234, 35 is around the corner. Now, whether the bulls manage to take the prices beyond this threshold with very high volumes, with open interest expansion or not, will determine how far it's going. Let's also not forget that you have expiry around the corner, and typically natural gas is not exactly a very trader-friendly commodity to roll over because of the high carry cost. So my guess is volatility can only go up from here, in spite of the fact that there might be relative calm in the international markets. Domestic markets might thrash around a little bit due to the expiry considerations.
But it has been very individual when it comes to the base metal space as well on a weekly basis, while most of the base metal prices may have been posting positive gains for this week. But Vijay, would you say that perhaps a copper and a lead seems to be doing better than a nickel or a aluminum?
Manisha, you used the word pockets of action. I completely agree with you. You couldn't have said it any better. I think there is very polarized action. Trader activity is focused around a few select counters, and copper does, of course, tend to be the bellwether of the industrial segment because it's known as the tin roof of the economy. Now, I think the 472 to 474 level is where I think inflection points lie. The bulls are likely to face some amount of resistance there. Should they overcome it, I think the bulls are back in action. And on the flip side, 458 levels would be throwing the bulls onto the ropes and on the defensive. So if it goes down below that, I think there would be a whole lot more unwinding in the offing. In terms of percentage moves, I completely agree with you. Copper and lead in the coming week do offer the potential of giving higher volatility, and which is welcome for a trader, I guess, as compared to other commodities, with a slight possible exception of nickel.
Deepen, which one are you picking up in the base metal sector, and how would you want to put your strategies on that?
We would be specifically isolating aluminum, as we've seen that almost all the commodities have rallied. Aluminum has been one of those commodities which has got a lesser relative strength, and it seems that as we could see some profit booking in the base metal pack, aluminum would be one of the commodity which would be worst hit, if I may use the term, in terms of price levels. And 111, 112 would be very stiff resistance zone, so any aggressive trader could definitely use these levels for short selling. And on the lower side, we could expect to book profits at 109, 50, 110 levels.